Let's take a look at this growing B2B property management SaaS that is AI resistant and has a monthly churn of 0.6%. It is making $321,926 a year in profit and listed for sale at an asking price of $1,450,000. That is a 4.5x valuation multiple. I'm going to go through this business listing here, pick out some of the key details, share some of my own experience-based insight, and ultimately my quick take on this business's valuation. We'll start by kind of skimming through the listing, covering the details of the business model, and then we'll go back and flesh out all the interesting details and ultimately get to my valuation. All right, I guess I was a little redundant here, but let's jump into it. This one is a business, a SaaS business, serving lenders, property managers, and municipalities. That is interesting, who need up-to-date, accurate information related to short-term rentals. The monitoring it provides is increasingly necessary for doing business in this lucrative growing market. Revenue has nearly doubled since 2022. I'm curious when it was established. Lenders needed to validate whether the property is backing a mortgage, comply with federal, state, local, and HOA laws and ordinances. Property managers need it to help prevent unauthorized rentals that circumvent leases. Municipalities need it to ensure permit and tax compliance for short-term rental owners in their jurisdictions. As platforms like Airbnb and VRBO continue to expand, these markets will continue to need help. With this business, a buyer has the opportunity to own a growing cash flow tech business. Growth has been largely organic, with very limited PPC advertising and a healthy stream of inbound leads. Because the market is so well defined, someone with account-based marketing expertise can implement structured sales and strategies. The lender market is the fastest growing segment of the business. More investors are looking to invest in short-term rental-backed mortgages, but need help understanding whether properties are compliant. A new owner can maintain momentum and continue to focus on the enormous upside. They could also develop other compliance solutions for lenders who always need help with due diligence. Sellers own the business for 3 years, rebuilding the underlying applications. He's ready to move on to a new challenge. Everything is operated with contractors for software dev and for data validation. Okay, this one's interesting here, and I have to say I like it. Let's just talk about what this business most likely does here. And let me know if you think I'm right or wrong on this, but I believe that this is something that analyzes a property's address to see if it is out there on any short-term rental sites. Something like that, so that property managers can see if somebody is, trying to sublease their apartment. I know that was a thing. What do people call it? People called it like short-term rental hacking or something like that. Or apartment hacking or lease hacking. I don't know what the buzzword was, but yeah, that's happened quite a bit. With regard to lenders, I mean, I don't know what, compliance lenders could be looking for. Maybe to just ensure that the properties are owner occupied and they're not trying to short-term rental them out if they're, making a mortgage on them. Something like that. But overall, this is very interesting. And I think that this is a value-added software because there's a lot of reasons or a lot of parties, I guess, and that's going to be lenders, municipalities, property managers that want to make sure properties are not being listed on these short-term rental sites, or maybe make sure that they are. Either way, they have a valid business interest, and the software seems to be making that happen. And it looks like municipalities right here using it to make sure that if a listing is registered, that they are registered for compliance tax. So it's scraping in some way, I'm guessing, the short-term rental listings that are out there and seeing if they are registered with the local permits or local authority for permits or whatever the heck they need to be compliant. So yeah, I think there's a very valid use case for it. I think this is a value-add software and it's necessary. Like, it has economic benefit to someone. It's not some kind of junk software, which we see Unfortunately, too much. I guess I don't really make videos about those because I think I filter them out before I get to them. But I like what they're doing here, and I think that this is a robust business. It's been around. We don't know when it was established. Do we know that? We don't know that. We just know that the sellers owned it for 3 years. This is the second owner of the business. It's making, what is that, roughly 75% margin. The churn rate is very low on it. I like that. The seller himself has nearly doubled revenue. And interestingly, they describe it as largely organic with a very limited PPC advertising and a healthy stream of inbound leads. So they haven't done a ton of aggressive marketing. Something else I like is that opens the door for marketing expertise, as they say here. I think that a product like this may benefit from a sales team or salesperson, but it doesn't seem like they have it. And what else do we like about it here? This line, they could also develop other compliance solutions for lenders. We don't know how many of their customers are lenders and how much they pay for it, so we can't, back that out. But I think that if you were in with lenders, I think that gives you a good option, or it's a good market and gives you a good opportunity to sell that market other compliance solutions. So I like this here. I think that there's a lot. What's your take on it? Is there anything you feel like I'm missing out on, or do you not like it? If you don't like it, I'd certainly love to hear from you in the comments below. If there's something you feel like I'm missing out on, let me know in the comments below as well. Now, let's shift gears and talk about the valuation. And if you've watched any of my other videos because you're a subscriber, and if you're not a subscriber, subscribe now so that you get all of my online business for sale listing analysis as I do them. Hit that subscribe button so you get them. But if you've watched any of my other ones, you know that my approach to valuing a business that I'm considering acquiring or making an offer, which is a valuation on a business, is to assign a valuation multiple to the business unit as it is currently, and then multiply that out over the forecasted income that you would expect as the new buyer. And that's accounting for growth or declining growth, lack of growth, or expenses or other sources of income you may be able to pull into it here. This listing doesn't give us much insight into the growth rate as it is now, other than to say it's doubled since 2022. I would say that it's on an uptrend. But let's talk about the business unit here. We have a SaaS business that's well established. It is proving stable with the 0.6% monthly churn. I think that's very low and healthy. It's growing. We know that. I don't know about this AI resistant thing. I feel like AI could maybe do something here. And I'd be curious to see if there's any plan for pulling AI into this, right? Or how the customers feel about AI. I don't think that AI is necessarily a threat, but I'm not getting the vibe that it's really supporting AI resistant either. The teaser has not made me believe that it is AI resistant, but we're still buying a SaaS that is stable, it's aged, it's survived under a new ownership or under a second owner here. And they've got contractors for software dev and data validation here. I think a reasonable multiple for this is 4 to 5x. This one is right there in the middle. So I think this is fairly valued from the perspective of the multiple. Then to ultimately achieve a fair valuation, or to ultimately arrive at a fair valuation, we need to understand what is going on with the revenue. Assuming the revenue and the income is stable, and you as the buyer would not incur any other expenses, and the revenue's at, like a slight growth trend, like 5%, 10%, then yeah, I'd say this is right on the money. If the revenue and subsequently income is declining, the business may be valued on the high side of fair, or if there's some type of risk. If the revenue is substantially growing, then I think this thing is valued on the low side of fair. But I think at a 4.5x multiple here, this one is a very, very attractive and well-valued business, unless you get into it and there's just something that we're absolutely missing. And considering all things considering, I think that this one will likely will likely be sold pretty quickly here. There's a lot to like about this one. On that note, let's consider what you could find out when you get into this business that would really make it not good, right? Or would really kind of be like, oh, that's a black eye or red flag. I'm just not going to touch it. Well, let's see, that could possibly be frequent changes in technology. And this is hard to articulate, but let me give you some context here. In the realm of scraping and scraping information, there's oftentimes a lot of change, and websites try to block scraping activity, right? So like Airbnb may try to block the scraping functionality that is needed to compile the data to make this whole business work. And there could be an uptick of that in the most recent year, right? To where they're constantly fighting these changes and the dev team is constantly having to make changes and updates to keep the software functioning because these platforms are blocking them or, trying to prevent the scraping. Maybe a platform did block them, so maybe their data is no longer as high quality as it was and they can no longer scrape something like that, right? So at this point, the customer base is still happy with it, right? They may have noticed a small decline in the quality of the product, but at this point they haven't decided to leave. But the trend could be that however they're gathering the data and actually facilitating the software is just becoming harder to do and may just be closed up. Their data source may be closed up, I guess, right? That could be a big problem. It could be that maybe, and I think this is a bit of a stretch, the seller has relationships with the customers, but considering this business has, transacted once, and I don't see anything that implies customer concentration in here. I don't think that's the case. It could be also that maybe, hey, revenue did double in the past 3 years, but maybe it actually tripled and then it has declined since then, right? So maybe revenue is declining as well. I'd certainly want to flesh out how many customers they have, what's the average customer value, but also how much dev time recently in the past year has gone into updating this software to ultimately still capture, no matter how they're doing that. I don't know if that's through API or scraping, but to capture the data that they need to facilitate. That is something that I think could be a black eye or red flag. The other thing would be, newer companies in the space. Certainly want to make a list of all the competitors in the space and then try to best estimate how long ago they were started using a tool like, I think archive.org, which tells you when a website first came online, SEMrush, which shows you traffic data, or straight up, incorporation records for these businesses. See if maybe there was a bunch of new competitors started in the past year or something like that. And finally, with any of these SaaS businesses, just the software is just out of date. I'm not getting that vibe because I think there was a line that was saying the seller has owned the business for 3 years, rebuilding the underlying application. So the seller's done a fair bit of work on this. Overall, if you're interested in acquiring a SaaS business, this one seems like a fair business at a fair valuation. That's my take. What is your take? Let me know in the comments below. And if you found this video helpful or insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off on that note.